Kitco News special coverage of Makori's annual Mainnet Summit is brought to you by Oasis Pro.
The Fed is holding steady for now. The hawkish pause was unanimous, and Fed Chair Jerome Powell also indicated that there could be another rate hike by the end of the year. Well, here to dissect the latest from the Fed, what it means for the economy, what it means for the crypto markets, and how these multi-year high yields are creating a new market for Treasuries in the digital space by tokenizing Treasuries, is Pat LaVecchia, the CEO of Oasis Pro. Pat is a leader in global fintech and digital transformations with over 25 years of experience in investment banking, corporations, and private equity. And he's negotiated more than $15 billion of deals globally, leading groups at Credit Suisse, First Boston, and Bear Stearns. Pat, welcome to Kitco. Good to have you with us.
Oh, well, thank you very much. It's a real pleasure being here.
All right, Pat, we have a lot of ground to cover, but let's start off with the macro and your takeaway from the Fed. Leaving rates at 5.25% to 5.5%. Higher for longer, pretty much the message that we got from Fed Chair Powell, and also indicating that there could be another rate hike on the table for the year. The Fed thinks that rates will have to remain high in the next 2 years, with the median Fed funds rate raised to 5.1% now, so 50 basis points higher than the June projections. What was your main takeaway from what we got from the Fed yesterday?
No surprise. The signaling has been very clear. Signaling has been very clear for the whole year regarding announcements coming out of the Fed. So I think it's the right course of action in regards to my opinion right now. I do think the next rate hike will occur, even though the statistics suggest it won't. I do think it'll be November. I think 2023 will be the end of the rate hikes, and there will be one more. And then 2024 will be steady state.
Steady state. So you're saying that you see a hike in November. The markets are currently pricing in a 71.5% chance of a hold in November and a over 50% chance of a pause in December. So
problems in China, the UAW strike. There's a lot of bad news on the horizon at this point in time. Oil is close to $100 at this point in time. All those are going to be factors, and I think you're seeing a acceleration of bad news. And tied to that, rather than just hold, increase rates, let the economy take the brunt of all the bad news at that point in time, so that 2024 there's an opportunity to really accelerate. And this is very similar to what, in regards to rate hike, it wasn't as aggressive. But in 1994, there were rate hikes somewhat similar to this. And then there was a bull market for about 8 years thereafter. So setting the foundation for growth thereafter.
Are you expecting a cut in 2024, given that it is an election year and it's the economy stupid? I mean, yes, the Fed is supposed to be an apolitical organization, but there may be some political pressure to cut and boost the markets, boost the economy?
Well, the Fed is supposed to be independent. I don't expect any cuts in 2024. I think that would be a mistake. I see that occurring in 2025. And if the Fed is right regarding a soft landing, 2025 would be aggressive rate cuts going forward. But I don't see it in 2024.
Well, regards the soft landing, we did have a slight change from Powell in terms of the language. He was saying that a soft landing was not a baseline expectation. Still sees it as a possibility, though. Did say that they expect GDP growth at 1.5% next year. So clearly not a recession because we're growing. What is your macro outlook? Do you still think that a soft landing is a possibility, that the Fed is going to be able to pull that one off? Or do you see a recession?
Yeah, well, I see a soft landing. So, look, we've already been in recessions. It's been industry by industry, service industry, other industries as well. So it's been somewhat of a rolling recession, but industry based rather than the entire economy. That's already occurred. They're threading a needle, and honestly, the majority of the economists on Wall Street have been wrong.
Yeah, that's true.
And the Fed has been, it seems, has been right. and been very steadfast in their approach. I commend them. I think they're going to do it.
Okay, we have had a number of the big banks revise their recession forecasts, saying that the chances are getting less and less likely that we'll have a recession in 2024. But as you just quite rightly pointed out, these are the same big banks that were forecasting a recession for this year and a very big market downturn, which so far hasn't been the case. But what we are seeing with these high rates, Pat, is liquidity leaving the markets, right? So what impact are you seeing on the crypto market with a Fed that's going higher for longer?
Well, the crypto market has been depressed. We're still in crypto winter. There was a big conference last week called Singapore 2049, and there was a lot of excitement out of it that the crypto winter was ending. But if you look at the actual tokens and the prices, the uncertainty in the regulatory environment, especially here in the U.S., I believe that those cryptos in general will be suppressed for probably the next year or so. Now, when I say that, Bitcoin and ETH are different. Bitcoin and ETH, specifically here in the U.S., have been deemed not staked ETH. Staked ETH is viewed as a security by some regulators, but ETH in general, as well as Bitcoin, as non-securities. So that overhang is much less there. And I think that going forward, I would look at those two as real, if I wanted to diversify into that space, as very attractive investment opportunities at this point in time. But with increasing rates, et cetera, the excitement of investing in crypto and versus a safe treasury investment, right, or money market investment is very clear.
Yeah, and we will certainly get to that, how these rates are making treasuries very attractive and how that is overlapping into the digital asset space. But before that, because you have your fingers in many pots at Oasis, including trading, I do want to focus a little bit more on what you see for the crypto markets. So Bitcoin making up around 50% of the overall crypto sector at the moment. We did see Bitcoin react negatively to the Fed, but sort of bounce back around, dropped from 27,000 and around like 26.5 at the moment. How do you see the macro impacting Bitcoin next year from a price forecast perspective? We've got the halving, we've got elections. Do you have a price outlook for Bitcoin for, say, mid-2024?
So this is my opinion, not Oasis Pro's, but I think it'll. There's a 50-50 chance we could be below where we are today. Higher interest rates lessen the demand for Bitcoin. Bitcoin volume is low on a historical basis. The halvings, the most recent halvings, typically you saw a doubling in price. With the most recent halving, you did not. It's gone the opposite direction because interest rates are, as you had detailed earlier, well above 5% at this point in time. So with that steady state here in the U.S., the most resilient market in the world, largest market in the world, I think that'll continue with Bitcoin. But long term, I'm a bull. I think regardless of timing the market, the opportunity is from a diversification standpoint, you should be invested in this asset class. Again, taking a step back, Bitcoin and ETH, that would be my area of focus if I wanted to invest directly into this sector. And in the long term, 5-10 years, you will do very well. I think right now, short term, with the less in volume, with interest rates where they are, my macro view is that we'll be steady state, and there's a 50-50 chance it could be below where we are today.
How much below?
It could go. It could drop as much as 50%, like it did less than a year ago. It could, again, just based on volumes, et cetera. I don't expect that. I would say trading range of 25 to 30 is probably what we're looking at.
Okay, so for those that have been optimistic of a spot Bitcoin ETF potentially getting approved with the likes of BlackRock now throwing its hat into the ring, and those that are optimistic that we have the cycle and that we have an election, and usually politicians like to see the economy doing well during an election year, and then are hoping for a new all-time high for Bitcoin in 2024. You're dashing their hopes a little bit there.
I'm not long term. I think it's fantastic. I'm just trying to, looking at the market again. Election is coming up here, and we're just focused here on the U.S., but it has implications across the world. But you have a dysfunctional Congress. Nothing is getting done, and in election year that'll lessen even further, because everyone's trying to get good news out of some type. So I really don't see much occurring in terms of legislation to move forward the crypto industry, at least in 2024. There's also the SEC and regulation. It's a cloud right now. With these Bitcoin ETFs, that's a very, very much of a positive, and actually ties in really well with what I said earlier, where I think Bitcoin and ETH, right behind the Bitcoin ETFs, there will be ETH ETFs, that those are very attractive investment opportunities. But nobody can predict.
But just not in 2024 is what you're saying. And we know ARK Invest, Kathy Wood, has filed for a spot ETH ETF. So long-term very bullish.
A lot of credibility.
So long-term very bullish on both Bitcoin and ETH, but just not necessarily in 2024.
Yeah, well, the SEC isn't tied to the politics. Right. So there could be a possibility that a Bitcoin ETF is approved. Absolutely. I don't think anyone can really predict that. What you're also seeing is a lot of crackdowns on crypto, not only here in the U.S., but now globally. And more news is coming out there. The issue is, will Chairman Gensler stay in his position? A lot of what's discussed is here in the U.S., if there's a change of control in the White House and in the legislative bodies, that it'll move much quicker. So that could possibly happen. But I think what we're looking at, frankly, is about 18 to 24 months before anything of substance occurs. Best case.
All right, fair enough. And as we said, this uncertainty with regulation is obviously a big downer for institutions who are a bit more cautious about getting involved. Now, we touched on the fact that we do have interest rates in the U.S. at 22-year highs. That means that Treasuries are looking very attractive. So that's also interesting in terms of, as you mentioned, in the crypto market, you've got a very safe asset that's yielding really quite handsome returns. So that's taking away money from riskier assets, but it's also creating a whole new market for U.S. Treasuries, now moving into the digital space, with U.S. Treasuries being increasingly tokenized. So firstly, explain what it means to tokenize a U.S. Treasury for our viewers who are not that familiar with the terminology.
Sure. So tokenization is a digital representation of an asset or a crypto. So think of it as a wrap. So the underlying asset, and this is all done through trusts, et cetera. There's a legal component to this, is a treasury instrument, a treasury bill or treasury bond. Right now, the focus is treasury bills. And then it's wrapped in a token, and again, a digital representation. When we get away from talking about tokenization and blockchain and crypto, that's when this market is really going to explode, because it's really technology that we're talking about. So what it allows is the benefits of blockchain, which include almost immediate settlement, for T-bills with the tokenization, lower cost, or many advantages we can talk about. In the treasury area, then crypto funds can invest in that rather than investing in treasury bills as a standalone. Then they can take those assets, tokenized, and potentially collateralize them and borrow against them, and then invest in new opportunities, including other treasury bills. But that's really what it is. It's a cryptographic wrap of an asset.
Like a digital certificate.
Exactly.
that I own a treasury.
Yep.
But why would I not just buy treasuries directly? Who is this tokenized treasury market appealing to?
It's appealing to crypto funds. So those in the crypto space, going back to what I said earlier, in regards to Bitcoin and ETH, and there's a bit of a steady state occurring in that. Well, there are crypto funds out there that are tasked with investing in tokenization, tokenized products, real-world assets as well. Treasury bills are real-world assets. So if they don't have the opportunity to invest in an attractive asset in the crypto space, they now have an alternative. The alternative is tokenized treasuries.
What about the overseas markets? That
Same
people
thing.
living overseas that may want the safety of a U.S. Treasury, but up until now find it too cumbersome or too challenging to invest directly in U.S. Treasuries. Are we going to see growing demand from retail investors and institutional investors overseas wanting to gain access to the safety enhanced returns of a U.S. Treasury via tokenized treasuries?
Absolutely, and there's fractionalization as well, and which some deem democratization, but there is a buy-in.
Meaning you can buy a smaller chunk
Exactly.
of it, so meaning individuals with less funds are still able to get in on the action without having the full amount to invest. They could just get a bit of it.
Exactly.
So what is that line? Fractionalization is democratization? Is that the line you were saying?
Yes, yeah. Fractionalization, taking $1 million bond, reducing it to $100. So the buy-in is 100, not 1 million, as an example. And it leads to democratization too. I'll go off on tokenization slightly in regards to a huge opportunity for emerging markets. Emerging markets right now, they issue bonds, sovereign bonds. And it's really institutions that buy it. But imagine if an emerging country has a need for $100 million, which is very small. Typically, they have to build up projects, then hit the market to issue sovereign debt in the hundreds of millions of dollars. But let's say they require $100 million for a water improvement project in an emerging market. Wouldn't it be interesting? And the buy-in is $1 million. Right? Wouldn't it be interesting to be able to offer that to your citizenry and as well as your diaspora in regards to those who want to see the country develop and do well? And instead of the buy-in of $1 million, you can make it $100 to support that particular country. That's very exciting. And that's part of the democratization opportunity.
Right. And and allowing people to get in on the action regardless of how much they have to invest in. So in terms of the U.S. Treasury market, who's really leading the field there with tokenization? So
I would mention two firms. One is based out of the UK called Monetalis. They've tokenized over $1 billion of U.S. Treasuries. Another based here in the United States is Ondo Finance. So I would look at those two as leaders in this field at this point in time.
And how does this help with demand for U.S. debt if we were having a wider market for U.S. Treasuries via tokenization? Because we have seen that the number of countries who are using dollars to allocate their foreign reserves to, that has sort of been on the decline with a political trend to de-dollarize, right? We have a bit of a bifurcation of the global monetary system. We have the BRICS, for example, wanting to move away from the dollar. The U.S. obviously has record levels of debt at the moment, but paying very handsomely with the yields we just discussed. Is this creating more demand for U.S. debt from outside now that we're tokenizing these treasuries?
Well, we're crawling right now. And eventually, we've got to get through this initial phase of what I call proof of concept, and then it'll grow from there. But certainly for the U.S. market, it's the largest market in the world right now. And China is going down this path as well for themselves. But can you imagine right now, their treasury buyers are only institutions. Wouldn't it be interesting that when the Treasury issues securities, Treasury bills or bonds, that they can open it up to accredited investors directly, as well as retail investors? The opportunity to buy in, because there is a spread, the middleman spread. The opportunity to buy direct from the government could be really enticing.
So do you see this in a way then serving to strengthen the U.S. dollar?
Absolutely, eventually. It's not next year. This is probably, it could be a decade away or more. But Eventually, again, we're talking about a technology that will facilitate the existing traditional markets. And, if you can grow your investor base, you can lower your interest rates too. So it could be beneficial for the U.S. Treasury as well, because they have a wider group of investors to go to versus right now it's primarily very large institutions.
Is this something that the U.S. government is embracing? I mean, we've seen regulation. Well, we've seen regulation be quite hostile to all of the digital assets in the DeFi space, right? But this is something that would directly benefit the U.S. government in terms of maintaining strength of the dollar. What are the regulatory requirements to tokenize U.S. Treasuries, for example? And you're saying the government is not being very helpful. So I guess that also begs the question why, but let's first focus on what are the regulatory issues with tokenizing a U.S. Treasury?
Well, it's being done. So tokenizing U.S. Treasuries, is being done right now, and they're traded and groups can buy them, but not on a widespread basis.
But who's checking that this token really represents U.S. Treasuries and that the underlying asset is there? Is there an institution from the government that is actually verifying this, that is auditing these tokens? So
you have custodians. So that is one approach. That custodial banks, the Bank of New York Mellons of the world, State Street's Northern Trust, Standard Chartered, J.P. Morgan. That's where these bills need to be custodied. So that's where the affirmation is required. But there may be groups out there I'm not familiar with that are tokenizing, because it's a very fragmented market right now.
But there isn't any kind of official regulatory criteria when it comes to tokenizing an asset yet.
No.
So as per usual, the bureaucracy hasn't caught up with the technology.
Exactly.
Pretty standard for the industry. But you mentioned traditional financial players like Bank of New York Mellon, and we're seeing a lot of the big TradFi players move into the tokenization space at large, not necessarily with treasuries, but we've seen the likes of Citigroup and JP Morgan really embrace tokenization with regards to how they deal with their own customer deposits. We've got JPM Coin, and Citigroup has just debuted a token service to transform customer deposits into digital tokens. Tell us about that trend that you're seeing from traditional finance in the tokenization space.
So traditional finance firms are way ahead of where most of the market believes they are right now. They have been working on blockchain technology probably for the last 5 to 8 years. And they're building the infrastructure internally. And okay, why is JP Morgan coin so interesting, or Citi as well? Because utilizing the blockchain, the speed of transmission of settlement versus SWIFT, for example, is incredible. You can, between banks, it can occur in minutes or even seconds versus days at this point in time. So utilizing these representation of tokens backed by reserves, dollars, is with large institutions, that to me is very exciting to see, and that may reduce the need for CBDCs, central bank digital currencies, in the short term.
Okay.
But it's
But not in the long term.
Well, I do think in the long term that paper money is going to disappear, and it's going to move digitally. Will it be central bank digital currencies? Potentially, but it's decades away.
All right, that's a conversation for another time. We have seen some progress from Republicans in terms of delaying a CBDC today, with a bill being put forward to the House on at least requiring Congress to approve a CBDC. So that would potentially delay. Viewers of Kitco know that a CBDC, a central bank digital currency, is not something that I'm particularly looking forward to, given that it obliterates privacy and anonymity. And again, I always like to point out the fact that it's programmable, so it would potentially allow governments to decide when your currency will work or won't work for certain transactions, which can be very problematic from a libertarian perspective. But I will not go on CBDCs right now. Let's bring it back to tokenization, which you're saying potentially delays us for a little bit longer. Where are we in terms of the real state of real world assets currently being tokenized? What is the size and scope of where we are right now?
It's in the billions. I'd say
it's in the billions already.
Yeah. Well, I mentioned real world. I mentioned Monetalis over $1 billion that they've done. So yes, it's in the billions. On the Treasury side. So real world asset, and I include Treasuries as real world assets, real estate, securities, a whole host. A year ago, it was probably 250, 300 million. So it's grown quite well, especially in the Treasuries arena. But again, we're crawling right now.
Yeah.
And even if it gets to 10 or 20 billion, that's a drop in the bucket. The market opportunity is much grander than that. So I'll give you an example. The wealth management channel is here in the U.S. is $38 trillion. Tokenizing that with real-world assets, be it securities, be it funds, be it direct investment in real estate, would be amazing, right? And what's that market? The wealth management market is RIAs. That is a huge opportunity. But we're crawling right now. And then we'll eventually get to that point. So I think you'll see exponential growth in RWAs in 2024 and 2025, but it'll still be a drop in the bucket versus the overall market size.
Okay, and there's certainly particular products within the financial sector that are more ripe for tokenization in terms of not being as efficient as other products. For example, private equity funds or private credit funds, right? In terms of tokenizing shares in those funds, right now you don't really have a way to really collateralize that or trade, correct me if I'm wrong, or trade shares within private equity funds or private credit funds with as much ease as you would if you tokenize them. So is that one of the areas that you're seeing more growth in than other areas in the market that are perhaps potentially more efficient at this stage?
Absolutely. I think asset management funds is a huge arena because with asset management, you have distributions. So there's a whole back office component of capital calls, being paid out dividends, et cetera. And utilizing the blockchain and tokenization, you have the opportunity to mitigate some of those back office services because what is the blockchain at the end of the day? It's a distributed ledger.
Yeah.
Right? And so all that ledger work right now is done manually. There's a lot of software there as well, but that could be reduced utilizing the blockchain. And right now, if you're an investor in a fund, the ticket size is quite high to go in. It could be $10 million or higher. And if you wanted to sell or diversify and sell a portion of your holdings, there's typically a 60-day right of first refusal, even if you find a buyer, to somebody who's already in the fund. So it's very cumbersome, very clunky. With tokenization, as it's embraced, you'll have that opportunity to do it on a real-time basis. And in our discussions with some of the largest asset management firms in the world, they are looking at tokenization as an opportunity to grow their investor base as well, and to allow trading, et cetera.
And this is something that Oasis Pro is actively involved in?
Yes, we're involved in that space.
So what would be the disadvantages of this? I see the efficiency, I see the idea that you've got this asset that now you can borrow against, you have collateral in a much more accessible form. What are the downsides?
So I would say there's really one, right? Whereas today, if you invest in a fund, your mark to market is your investment in the fund. Once it starts trading, and let's say it trades down, then that can have an impact on your fund, right? Yeah. So to me, that's why the private markets, a way again for funds, has not moved as quickly with tokenization, because investment managers like the fact that they don't have to mark to market in a private instrument.
Yeah, there is also the opaqueness, which can be quite
very
appealing. Yeah.
Yes.
Well, what about the hacking side, right? If all of these things are on a blockchain, surely they're more susceptible to hacking, to cybersecurity breaches. How is that being viewed in terms of a potentially unnecessary risk? that we're now adding into the mix?
I think with large institutions, it's a real risk because they are they do not understand that the technology and the crypto fraud are one and the same. They believe it's one and the same. Blockchain is a tech. It's a very powerful technology. And that's why from an infrastructure standpoint, it's, in my opinion, going to become ubiquitous. But the FTX news, the hacking of the blockchain, certain blockchains, the stealing of crypto, all that adds a negativity that if you're a large institution, you don't want to get involved in at this point in time from a credibility standpoint. Now, again, you need to separate the two. And once we separate the two and focus just on the tech, then going forward, there will be hacks, but there are hacks in the real world as well, right? In the current legacy systems that occur. That's why the cybersecurity market is so huge over the last 30 or 40 years. Where whatever is built, it's not about preventing hacking. It's about once the hacking occurs, how you respond to it. And that's the important thing. I don't think there's any industry or technology that's unhackable.
Well, there's hacking with regards to assets that we have in the digital space. But from what my understanding is, the trend is to tokenize assets in the real world, in the physical space that don't necessarily have a digital representation. And then that opens that whole world up to hacking as well. Like for example, I guess let's backpedal and ask, what do you see as the future of tokenization in terms of assets in the real world beyond financial products? Are we gonna, you mentioned real estate, are we gonna see tokenization of cars, of artwork? Like where do you see this going?
Well, blockchain is ubiquitous. It's across, one would struggle to find anywhere a ledger or a record is required. Blockchain is very useful, that technology. It's immutable, so it can't be changed. So there's a complete listing of everything tied to an asset, a provenance. If you buy a watch, a certain watch, or a purse, or whatever it may be, a high luxury good, rather than it being a fake, which is very prominent right now, there's the opportunity through the blockchain that you can actually trace the provenance, as an example. But back to financial assets and real estate, Citibank came out with a report earlier this year that they expect the tokenization market on a global basis to be over $10 trillion. So that's very exciting to see.
Over what period of time?
By 2030.
$10 trillion.
$10 trillion.
But you were talking about tokenizing a watch, for example, a Rolex, a collector's watch. Do you see that happening in terms of assets across the board? Again, real physical assets being tokenized?
Yeah, absolutely.
Why would I want to do that? What's the advantage to me as somebody that owns said Rolex watch, for example?
Well, it's in the event you want to sell it. If there's an opportunity for trading it, that you have a physical, you have a digital representation that is
to prove its authenticity.
Exactly.
Okay. So when
and also as an example for cannabis in Canada, there are some companies utilizing the blockchain and creating tokens for cannabis, so you can actually trace the from the farm to the middleman, to the packaging, to the retail store of that particular cannabis product, which also from a regulatory standpoint could be really interesting in case there are issues, there are health issues, et cetera. You could trace it back much quicker than you can today across for food products, all different types of products.
Right. Well, whether the openness and transparency of blockchain, also there's the flip side, and that's potentially lack of privacy. So if we're looking at a world where practically everything is tokenized, and we link that to this idea of a digital ID, which is being pushed, what does that mean? I paint a picture for me of how things look in 10 years' time. I have a digital ID and everything I own is tokenized, and I guess authorities or anybody who has access can see absolutely everything I own linked back to my digital ID right there in the blockchain?
It's a risk. I would say in the 80s, one would think, would an Uber have been imagined? Would doing banking over...
Yeah, getting into a car with a random stranger.
Exactly.
I believe I was explicitly warned not to do that. And funnily enough, the Uber drivers that have candy, they get a bigger tip. So exactly what your mom told you not to do. Do not get into a car with strangers, and certainly do not take candy from them. Now we're kind of like rewarding that and playing along. But I digress. Go ahead.
Yeah, no, but you hit the nail on the head. Exactly, right? And if someone had told me I'd do all my banking over a phone on utilizing Wi-Fi or the internet in the early 90s was very unstable. Yeah, I would have bet against that. So I think going forward, where we're heading is there's going to be less. Privacy is always at the forefront. Here in the U.S., there's AI. They're already having hearings about privacy and the utilization of AI, which is in the right direction. But again, imagine where we were in the 80s, even 90s, early 2000s, and how much of our personal digital self is already out there. Many of us wouldn't have expected this. It's out there. You can find almost anything on the dark web for everybody. So I think, unfortunately, we may be heading in that direction. But I do think that many people, tied to your question, are thinking about privacy every step of the way. But a lot of what many of us do, especially in the United States and the first world countries, all that information is out there: where you live, what you drive, your credit. It's not hidden.
So how big do you see the tokenization industry in, say, the next 10 years?
I mentioned the Citibank research report, and I think
that was particularly financial products.
Yeah,
I believe.
Yeah, I think that as a base, 10 trillion. I think that's conservative. So I would double or triple that.
Okay, so say you're an investor, you're hearing about the trend. Whether you're for it or not is another story, but you're hearing about the trend. You see that tokenization is happening and you want to capitalize on that. How can an investor benefit from the overall trend of tokenization?
So there aren't any companies that are specifically focused on that of size. So there may be some micro-cap companies. I'm not quite sure I'd even mention them. But in my opinion, the large financial institutions, you mentioned JP Morgan and Citi, making a lot of news with deposit tokens, et cetera. That's, in my opinion, a really interesting bet on the future of blockchain. I view both of those firms, especially JP Morgan, as one of the largest fintech firms in the world. They're doing a lot of forward thinking and building those products. I would also look at large asset management firms like Apollo and KKR that have been making announcements in the digital space. And that's where I would focus today, in regards to public companies, my investments.
So the companies that are behind the technology and actually doing the tokenization, are those mostly private companies at this point?
They are, and it's a very fragmented market right now.
Okay, so in terms of getting exposure as a retail investor, the public companies that you've just listed are what? Apollo, JP Morgan, KKR? And
Citi.
And Citi, that's a potential way to...
Yeah, they are all in this space.
Okay.
So that's a safe investment. But there's an opportunity that if they're already in the space and that tidal wave starts moving in terms of tokenization, and they're well ahead of the game versus others.
Okay. Well, we like to keep our viewers ahead of the game and ahead of the curve. This is not investment advice, however, but thank you for sharing those very valuable insights with us. Pat LaVecchia, really appreciate it. Thank you.
This has been fantastic. Thank you.
Hope to see you again soon.
Likewise. Thank you.
All right, and thank you for watching Kitco's coverage at Makori Mainnet in New York. For me, Michelle Makori, and the Kitco team. If you're watching us on YouTube, make sure to subscribe, and we'll see you next time.
Kitco News special coverage of Masari's annual Mainnet Summit is brought to you by Oasis Pro.